Hey there guys, and welcome back to Alex Invests. For those of you who don't know, I'm Alex. I'm a business owner with a degree in economics. Today, as we can see, the markets are a little bit mixed, but two stocks that are doing well are two of the stocks that I talked about yesterday too, and that's FCell and Oxy. FCell is still one of my favorite stocks and climbing again after that public share offering. Up today, another almost 10%. But today we're going to talk about Very Good Food Company, because this is another one that's had an insane run lately. We're almost up at that $10 mark, but today we saw a little bit of a downturn, but not even 1% down, and it does have me a little bit worried moving forward here, because it seems their revenue doesn't really make up for their share price right now. So I'll tell you guys what I'm going to do about that in this video. But before we get into it, as always, please like and subscribe, guys. It really does help out the channel, and it helps me create more content for you guys. Now, obviously, their revenue has grown 322% year over year, which is fantastic, right? But last quarter, they only grew from $1.1 million to $1.4 million, representing a 26.6% increase quarter over quarter. Now, this is still pretty good, right? But when you compare it to quarter one to quarter two, then it's a big difference, because in quarter one, they made about $338,000 in revenue, and in quarter two, they made about $1.1 million in revenue, which again represents a 225% increase in revenue quarter over quarter. That's the kind of growth we want to see, and that's why we've seen this price just absolutely soar, right? But it tells me that their growth might be slowing a little bit. This might just be seasonal, but still, it's quite a lot of slowed growth here. So I'm not sure if this high price right now is fully sustainable, and we may see a little bit of a drop coming. Now, there are a couple other things to note about the Q3 financials. So first of all, they now have almost $16 million in assets, whereas last quarter they had less than half at around $6 million. So big increase there. Now, if we look at their cash alone, we see in quarter three they had cash of $8 million, whereas quarter two they only had cash of about $3 million. Now compare Q3 2020 to Q3 2019, and we see an $8 million compared to only $405,000 in cash. So that is a huge increase there, which is great to see, again, for that funding of growth. Now, obviously, we can't talk about cash without talking about their bought deal prospectus offering to Canaccord of 3.7 million shares at a price of $3.50. Now, what this means is a company will do this instead of issuing a public offering, because they want all the shares to be actually bought and make sure that all the shares are bought. So one underwriter company will buy all the shares at a discounted price, and that discounted price happened to be $3.50. Now, this is a very good deal for the underwriter, which is Canaccord, but also not too bad for Very Good Foods, who now again has way more cash to work with. There was essentially no downward pressure on the stock because of this either, which is very nice to see. And they will be using this extra cash partly for their new production facility in Vancouver, which they call the Rupert facility, and of course for general corporate purposes. What's also interesting to note is that last quarter they had a loss per share of 0.03, but in quarter three they had a loss per share of 0.06. And for the price we're at right now, yes, this does worry me a little bit. But again, they are growing a lot and they have a lot of cash now to work with, so not too much at all. I thought we would maybe see a bit of a drop today actually in the company, but again, we really didn't. The other great thing to note about the cash they have now is they've increased their cash, right? But they've also decreased their outstanding debt to just $40,000, where last quarter they already decreased it by $1.1 million, but it was still much higher than that $40,000 we see now. So that is also really good to see. And maybe part of the reason why we're seeing such a big run in this company because of their potential growth. Now, of course, for their revenues that they currently have, again, like I said, their price really isn't justified. But of course, I'm not selling any of my shares. I was thinking about it actually yesterday at around the $9 mark, but I decided against it because if the price does fall, what am I going to do? Just pick up more shares, of course. But again, I'm a long-term investor. And when you start investing, you know, you really have to decide what kind of investor you want to be. Do you want to be a trader who does trades throughout the days or weeks, or do you want to be a long-term investor? Do you want to do swing trades? You know, you really have to decide kind of who you want to be, and I am a long-term investor, so I hold for the long term in growth stocks that I know are going to do extremely well moving forward, and I like to get that low price in and those high percentages on my original investment for those profits. So when the price does go down, I will be picking up more shares, of course, but I will not be selling any. So all in all, their financial statements in Q3 compared to Q2 were all right. Nothing extremely special, but pretty good for growth moving forward still. Again, maybe not fully justified for the huge run we have had. But of course, there are a few other things going on in this company that may have led to some of that run up. And one of those is obviously the hype we're seeing in this company right now because of a multitude of things. Firstly, and this is what affected the share price on Monday, likely making it continue to go up, and perhaps a little bit today as well, is that they announced a new member on their board of directors, Bill Tollanay. He used to be the senior director of marketing at Whole Foods, and after that worked for Amazon as regional general manager, helping launch the expansion of Amazon Prime Now. So obviously this guy has a pretty big history, but what's unfortunate for me to hear is that Drew Bonnell actually stepped down in his position as CFO. And this is actually who I met with a long time ago now, and I mentioned this in my first video on Very Good Foods, because he is now pursuing other opportunities, which I will obviously be also looking into. Now, Drew Bonnell was a very good CFO and is a big reason why, as Very Good Foods agrees, the stock has run up so much. So to see him go does make me a little bit sad in the company, and is also another reason why I was thinking of maybe selling a few shares, but that would have only been not even a quarter of my initial investment because there was some other stocks that I was looking into. A few weeks ago, a new president was also appointed from Daiya Foods. So now this obviously also led to more hype. It seems that the company is making quite a few changes at the corporate level here, but I think it will work out for them, even though I might be a little bit skeptical at first, especially again because of the extremely high price. I do have a lot of shares in this company, but I will not be picking up any more right now until we do see a bit of a drop. So keep that in mind, especially if you're looking to get into the stock for the first time. I do believe in the company. I do believe in the new president, who seems to have quite an impressive record with Daiya Foods as well, and helped them grow significantly, although she is not taking over the role until January 2021. All right, guys, now I just wanted to show you guys the 1 month, 1 hour chart here. And I drew these two trend lines, and we can see that we're still staying in between this channel, which is great to see, right? But they're not perfect trend lines either. Obviously, we're seeing extremely high volume continuing here, which is nice to see, but something to point out. If we look at the MACD indicator here, we can see that the signal line has just gone below the MACD line, and we're seeing some bearish momentum start to come in. Now, we may see that attribute to a bit of a drop down in the price moving forward in the next few days here. So watch out for that. And I will say, if we see a drop down to around the $7 mark, which I could quite easily see happening here, then I will definitely consider picking up more shares in this company. And I suggest you do the same, because at the end of the day, we are going to see this stock be much higher than the price it is at right now. They are growing. They are doing a lot with the funds they have and the new funds they have, and we can see their financial Q3 report is still pretty good. All right, guys, so that's gonna do it for the video today. I hope you guys liked it. If you did, please like, subscribe, leave me a comment, because you know I love getting comments. And other than that, I hope you guys have a fantastic day, and I'll see you guys tomorrow.